BT now. It's buy now, sell now this Monday morning. I'm Veena Kapasi and along with me is Varun Hirimal. Hi Varun, morning. And it looks like we're sort of building up on that momentum we witnessed on Friday's trading session with yet another bump up of more than 1% coming in, with the Nifty trying to claw back to that 11,200 mark. In fact, we're just about at the high point of the day and just settling in over there at 11,185, 37,830 on the Sensex, and that's really the big headline of today. The stellar rebound continues post the expiry rally on Friday. All sectors are in the green. Energy and PSU bank indices, though, are leading the surge. Moving on, the all-important moratorium case, where the Supreme Court has yet again deferred hearing of the same till the 5th of October. Remember that any which ways banks are not supposed to declare NPAs for any account that has defaulted on servicing their regular payments post the 31st of August as well. The other question is with respect to the interest on interest bit. Update from V or Vodafone Idea. The company has announced that it is going to be upgrading its 3G users to 4G in some of the key markets. Maruti Suzuki has given an update on its unlocking procedures. It says 97% of its outlets are now open. However, they do say that it's still a long way to go to reach normal figures or pre-COVID figures in terms of sales. More suitors lining up for Reliance Retail. It looks like TPG, General Atlantic are now eyeing a stake in the retail counter of Reliance Industries. This after Silver Lake and KKR have already picked up a stake for themselves. And for cigarette makers, Maharashtra has banned the sale of loose cigarettes. This is only the state of Maharashtra, and as per reports, 8 to 10% of the total sales of cigarettes comes from the state. And reports suggest that Tatas are now tapping private equity funds to buy out the massive stake owned by the Shapoorji Pallonji Group.
Okay, thanks for that, Mubina. Great to get the headlines in for this Monday morning as we get into trade. But, just getting a recap of what's happened in the markets, and let's understand why we're currently up 1.34% in the Nifty. It's because globally there's been a very strong handover, not just 1% gains. NASDAQ, S&P, Dow, all were up over 1%. NASDAQ was up over 2%, and futures also are today trending very positively. So we've definitely reclaimed 11,100. Looks like we're about to reclaim 11,200. Doesn't really matter where you look today. You want to look at the mid-cap index, we're up nearly 3%. The auto index, again, up nearly 3%. The bank index, which is weak and tends to underperform, that's up over 2%. So across the board today, we have winners from all the sectors, and then we have a few losers as well. But the breadth is really in favor. 45 of the 50 Nifty stocks are advancing. ONGC on the back of that government. There's a lot of share sale activity happening over there, so that's a big one to look out for. 5% up for ONGC. Tata Motors as well, not far behind at 5% up. Bajaj Finance up nearly 5% as well, so look at Finserv. That should be following very closely. Adani Ports up 5% as well. And then GAIL up nearly 4%. So some large winners in the Nifty. On the losing side, you have stocks that are losing, but not by that much. You have a CIPLA down 1.5%. You have an Infosys down 1%. You have TCS down 1%. Wipro down 0.3%. And then Divi's Lab down just about flat now, but it was slightly negative earlier this morning. So we're really trading with a positive bias. Let's see if we can hold on to this for the rest of the day. Now that we've got over the market, we also quickly just want to bring up our BNSN quiz question for the day, which we'll be giving you the answer to at 11:45. And the question today is, which one of the following technology companies has the highest EBITDA margin? Your options are TCS, Wipro, Infosys and HCL Tech. So the four larger IT companies. But which one of these is the most profitable? That's what you need to get to the bottom of today. Back to you, Mubina. Okay. We're going to quickly also pull up the BNSN stock cloud this morning before we begin our talk on technicals and fundamentals. So let's see what we have lined up for you today. 10 stocks that are making headlines for various reasons. Let's begin with an ITC. Cigarettes cannot be sold loosely in Maharashtra anymore. You have to buy a pack if you want to smoke. So that's going to hurt the sales to a certain extent because let's remember over here in India, everyone buys loose cigarettes. So that's got that counter in focus. We then have Reliance really heating up as the number of players looking to enter Reliance retail just does not stop. It marks a strong resemblance to what we saw with Jio a couple months ago, where we had those 10 checks or whatever in a line. Now the same thing's happening with Reliance retail. Then Tata companies are all in focus, obviously, because mysteries are looking to part with Tata, unfortunately. But it seems that the marquee names are willing to buy that over 1 lakh crore stake that the mysteries have out. So maybe we'll hear something on that. Then Hero Motors in there this morning as well. Very interesting because it seems that Harley Davidson might now be looking to partner with Hero here domestically to do some of their sales, and that some of their dedicated units in Thailand might now also be a comprehensive partnership between Hero and Harley Davidson. So that's something to keep an eye out for. Then we have banks collectively, all of them, private and PSU, because the Supreme Court hearing is currently on right now, which is deciding on the crucial interest waiver that could cost lakhs of crores to banks. We then have NTPC on a CLSA upgrade. We have ONGC on the gas thrust by the Indian government. We have Linde as oxygen prices have been finally capped. So this stock was on a tear because oxygen prices in hospitals were going up because of all the oxygen required for COVID patients. There's now been a ceiling placed there, so they can't keep charging whatever they want. There is some limitation. But that being said, that stock has done very well. And then Jayashree Tea, let me repeat that, something we don't too commonly discuss on the show or on the channel, but it seems that while we're all drinking tea at home, the consumption has really shot up for these guys. So we're going to be having a chat with them later in the week. But that pretty much comprises the cloud this morning. And with that, I believe we are now ready to take our queries and market chatter forward with Kunal and Vijay Chopra. Good morning, gentlemen. Great to connect with you both again. Kunal, coming to you first. It looks like the rally is here to stay, at least in the backdrop of US stimulus, and we're having a great day on the bourses. What's catching your eye in terms of a high risk and a low risk idea today?
Yeah, so good morning, Varun, and very good day for the markets. And I think what's more important is not just the point gains, but this the follow through price action, what we are seeing on Friday, what we left off on Friday on the indices and individual stocks. However, I think the action is still remaining towards many mid cap names. We're seeing very mild bit of rallies coming into the large cap names. There are no leadership sectors and stocks which are emerging. IT stocks have taken a bit of a back seat. Pharma stocks have just about been very fragmented. They've seen very fragmented buying. So I think in that regards, I will keep it very, very stock specific. And two buy calls which I would want to initiate. First one is about Bata India. Now, it's an interesting mid-cap stock because it's been a largely an underperformer in, I think, the last 5-6 months of this price recovery. It's been one of the few mid-cap names which has done exceptionally well in the last 8-10 years. But it's just that in the last 6 months, the stock has been unable to find that kind of a pickup in price section. But I believe on the daily chart, there are some signs of confirmation which are coming along for Bata India. That could result into the stock breaking out of its sideways range and an underperformance kind of a zone. So I will place that as a low risk buy on Bata India for a target of almost 1400, and stop loss could be kept at 1300ish. The second would be a buy more on the high risk play. It's a buy on Tata Motors. Now, if you remember, on last week on Friday, I had given a chart buster on Tata Motors, indicating that how the stock has now touched back to its crucial support zone of 120-ish proximity, and from there on, even if there's a marginal bit of a bounce, that bounce should probably have around, come around to 140 on Tata Motors. So the stock is at 133, on spot levels, and I believe that there could be room for another 7 rupees on the upside for Tata Motors. Would suggest that as a buy. Targets of 140 and stop loss could be created to 129.
All right, that's of course Kunal Bothra talking to us about the markets as well as his high risk and low risk ideas. Vijay Chopra, over to you then. How are you reading into the markets? I mean, do you think that at this point of time we simply seem to be aping what the Dow is giving us in terms of a handover? Like Varun flagged off, it's the futures that are seeing a rally and hence our own equity markets as well. And also your high risk and low risk ideas for our viewers.
So good morning, friends. My first thoughts are that we had a much needed correction because markets were getting overheated, and somehow I felt that and I've spoken on your channel as well that this was a correction which was much needed. And once we are through with the correction, I think that markets are going to stabilize around these levels. So my sense is that most probably we might see 11,300, 11,400 levels also happening very soon. And if at all markets consolidate around here, I would be really, really happy. Now, what is pulling the markets up? Number one, Reliance. This slew of good news around Reliance is not stopping. First it was Geo and now it is retail. So I think that as far as money keeps on flowing into Reliance, we'll see markets going up. The other lever is TCS. So I think that TCS is also a bellwether and a heavyweight, and I think that TCS also looks like a very strong contender for an up move. So I think technology and Reliance stocks, technology heavyweights and Reliance stocks are going to take the markets higher. So I believe that no problem at all at this point of time, because I think that the hearing for the moratorium is going to probably going to be extended to October 1st week. So let's see. I don't think that markets are going to react negatively to it. As far as my low risk ideas go, I think that BHEL is very nicely placed at this point of time, and I think that it can go up to 45 odd levels. So presently it is about 4% up. So BHEL can be bought by low risk people who are averse to risk. BHEL is a low risk idea. The other idea is Wipro. I think stock is slowly moving up, presently trading at 312. It can go up to 330, 340 as well. I would also like to recommend a high risk idea. So that would be BEL. So BEL has generally it shows a lot of spikes. So I think that BEL presently can go up to 110, 105 and 110. So BEL can be a high risk idea. Investors can get into BEL and make a quick buck.
All right. Well, that's of course the view coming in on some stocks. BHEL is one of them that Vijay has advised. Okay, this is the show where we also take on board your questions and queries. You've been writing in to us, and now we're going to get them answered. So let's take on board our first question that we have received from Yashoda. Yashoda asks that I'm holding 300 shares of Shriram Transport at 670 rupees per share, and ITC, a stock that's been talked about quite often on social media, at 205 rupees. She wants to know the long-term view for both of these counters. ITC in particular, Kunal, has been one of those stocks like a Coal India and L&T that have just moved from one point to another without really doing much for long-term investors in particular. What would be your view on both of these counters, though, Shriram and ITC?
So I think I'll start off with Shriram Transport in the order of how the viewer has asked, and I think the stock seems to be now in a zone which I believe is an underperforming kind of a range for Shriram Transport. The stock has been trying to show signs earlier. I think the month of June and July there were some fresh rallies which emerged into these NBFC stock names, but then it did not see a major follow through. The stock is now going into a downward kind of a grind. So I would be of the view that maybe Shriram Transport could go through a downward drift. Now the good part about the investor is that it's the investor is not bought at a much higher price range. I think it's just about 8 to 9% higher from current levels. So I think you can probably stay put, but I would not recommend averaging on Shriram Transport at current levels, because I believe that the stock could go through more of a downward drift, and there could be more of a sideways to a slightly bearish price action for the next couple of weeks, couple of months at least, for the stock price. Coming to ITC, I think the chart patterns are completely different. Now, when I was looking at the charts for ITC on the slightly medium-term structure, it indicates that the stock is now hitting back to a very strong support zone. The March-April low, closing low for ITC on the monthly basis was around 165 territory. We saw a good bounce, for the stock so far in the last, I think, 2 days or 3 days of price action from 165 to 170. You've bought at a price of 205 on ITC. So I believe that if the stock comes back to the support zone of 165, 170, I would advise the investor to average at those levels. And I believe that the stock holds a lot of potential from longer term play. And I believe that this is a very important support zone. And technical evidence indicates that the stock should hold on to this key support zone of 165 to 170. So, given the weight of evidence, I would indicate that ITC could be a good, a buy on dips or average on dips candidate. But the Shriram Transport is, clear avoid as of now. If you've already bought at high levels, then I believe you should just hold and stay put in it.
Okay, so that's the recommendations coming in from Kunal on Shriram and ITC. From a more longer term perspective, which Yashoda, I believe, does want an opinion on, one should perhaps shift their focus on the fundamentals, on the underlying strength, the financial growth, etc. of both of these companies. Vijay, what would be your opinion on Shriram and ITC?
Well, I would start with ITC, and I think that, again, it's a bellwether, and we've not seen many things happening in ITC, and it does happen that good quality stocks do not do anything for a long time, and then suddenly we see a spurt. So for long-term investors, I think that this is a peach of a price, around 170 odd. If you get ITC, hold it for a longer term. I think that this stock is all set to cross 300 if somebody holds for 3 to 4 years. No problem at all in ITC for that matter. This is a news in Maharashtra which is going to have a bit of a it's a dampener. But I think that on the flip side, if you look, people who bought single cigarettes would buy a packet, so that the net sales would increase. So I would say that people who smoke cigarettes, they would not go to other options like BD or chewing tobacco. So if they are addicted to something, I think that overall the sales would increase over a period of time. So ITC is well placed for an up move, so no problem at all. If you talk about Shriram Transport, I think that as the economy has started showing green shoots of revival, especially the auto sector, and Shriram has primarily a lot of exposure in the auto space, in the tractor space. Primarily, southern part of the country, rural, markets, they're very strong in the southern part of the country. So I would say that, just hold on to the stock and do keep a stop loss, because, there are times when in market crashes, we see financial stocks reacting very negatively. So I would recommend a stop loss of around maybe 550 and keep on holding the stock. And if at all it shows strength, probably it will see 750 levels again. So hold on to the stock. I'm hopeful that as economy revives, Shriram Transport would revive as well.
Okay, thanks for that, Vijay. Let's get a move on. Our next query revolves around mid-cap and small-cap IT stocks, and we have Ishan Choka from Pune writing to us via email. He would like to invest in some small-cap and mid-cap IT companies, and he'd like to have some suggestions from our experts. So Kunal, coming to you first, what would you like to flag off from the smaller IT companies for Ishan?
Well, from the mid-cap front, I think there are a lot of opportunities, and I think the sector is moving extremely well. So I think it doesn't come as a surprise that the viewer is looking to build on, try and utilize this, rally for the IT stocks. But then there are a lot of options to choose from. Now, if you look at the strongest mid-cap name purely in terms of price performance, Coforge or NIT Tech, the earlier NIT Tech, which was renamed. I think that stock looks exceptionally well. I think the stock has been hitting new highs almost on a regular basis. Even in periods of extreme volatility in the markets, the stock generally stands to stand tall and try and outperform even in those kind of market scenarios. So I believe that's one of the strongest names. But of course, the stock has moved up significantly higher. So if you can get some good dips or good retracements on the stock prices, then I believe that could be a good entry point for you on Coforge. Tata Elxsi is also the other IT stock which looks attractive on charts as well. So that's from the mid cap front. From the small cap IT stocks, I think NIIT Limited is one stock which on the small cap looks to be a strong potential candidate for a breakout. The stock was taking resistance at 115 for I think the last 3, 4, 5 years, and you saw finally a strong break above this 115 mark for NIIT Limited, and post that we've just seen the stock gaining strength after strength. So I think this could be a interesting small cap name which you can look at from the IT space.
Okay, thanks for that, Kunal. Some pretty interesting names over there. Vijay, what about you? Any overlap with the companies that Kunal just said, or do you have a fresh perspective as far as small cap and mid cap IT is concerned?
Well, I think that COVID has definitely redefined the way people used to look at technology, and the way work from home has happened, and it has become kind of a necessity for the entire corporate world, the education system, to a great extent. Even e-medicine has taken a new dimension during COVID. So I think that technology is now looked at as a much more bigger canvas than it was pre-COVID. So there are a few names I think that I could recommend. L&T Technology I like. As a mid-cap company, it's a good play. Hexaware again is a great company to have in a portfolio. If you talk about the small cap space, I think that there's a company called First Source Limited (FSL), trading at about 72, 73. It can once it breaches 85, I think that it can also cross 100. So there are a few very interesting names, a lot of things happening in the IT space, and I would say that stick with the well-established names and not the other ones. So whatever stocks I've talked to you about, even NIIT, as Kunal said, is also fairly good with a longer-term perspective. So few stocks, yes, are definitely there on my radar.
Okay, well, it's time for our chart buster segment then, and as always, Kunal Bothra, take it away. What are you identifying for our viewers today?
Well, yes, Mumina, and interesting outlook today. Last week we were discussing about certain stocks like Tata Motors, etc. This week I'm highlighting the relation or the correlation between the Nifty and the Bank Nifty, and there are some very interesting insights which you can see. So the month of till the month of February and March, both these indices which tend to move in tandem, they move in exactly coherent price actions. So as you can see on the charts, I've marked the shaded region in the month of February and March, and when the big sell-off happened, on the markets overall. Look at the convergence of both of these lines, both of these price lines. So the blue line is the Nifty, or the price charts of Nifty. The brown is the price charts of Bank Nifty. And look at the merging of both of these lines and coherent move on the price action. That indicates that the sell-off was more of a stronger sell-off on both of these stocks, which moved in tandem in terms of price action. But when the bounce actually started from the month of March, we've been talking of that how the Bank Nifty is lagging behind. But look at the divergence of price action right now. This is one of the biggest divergence the one I spotted on the Bank Nifty and the Nifty charts. You can look at just the recent marks. I've marked it with a very faint kind of a trend line where the points A have been marked, and Bank Nifty has confirmed the break of the June July supports, but Nifty is just holding on to those June July supports of 10,800. So there is a slight degree of outperformance even in a corrective phase for the Nifty, which is important as compared to the Bank Nifty. Now these are big kind of divergences. Now we are expecting a lot of news flow to come across with the Nifty banking index as well as on the PSU and the private sector banks side as well. So if there is a catch up on the Bank Nifty side, then I believe that the catch up could be extremely vicious and extremely strong in nature because of this extremely high set of divergences. I believe an eventual convergence when both these trend lines could probably meet together could be very much in the offing over the next 2 to 3 months. So I believe that this is one very important trend to be watched out for, that the convergence of Bank Nifty. Which way would that happen? Whether the Bank Nifty rallies or whether the Nifty corrects, it's difficult to anticipate now. But I think for someone who's using a pair strategy, I think a buying on Bank Nifty and selling on Nifty could be a very good trade. Could turn out to be a very good trade for the next 1 to 3 months.
Okay, fabulous. So Kunal has clearly communicated that there's an opportunity in banking. So figure out which way you want to go and allocate according to that view. But with that being said, let's switch gears a little bit. Jayesh has also been doing a lot of his own technical analysis, and which are the stocks where analysts are only bullish and none of them have a sell or a hold rating on the stocks. Jayesh is standing by with the list of names.
Let's have a look at the list of stocks where there is extreme bullishness as far as the analyst expectation is concerned. Starting off with ICICI Bank, where there are 58 analysts who track the stock and all of them have a buy rating. It also offers a return potential in excess of 35%. Also remember that ICICI Bank has never traded above its target price ever since Jan 2018. Moving on to Bharti Airtel, now this stock has been in limelight over the last 6 months or so. There are 30 analysts and all of them have a buy rating, and it also offers a return potential in excess of 55%. Moving on to Hindalco, where there are 34 analysts who track the stock and all of them have a buy rating, along with the stock offering a return potential in excess of 40%. Lastly, you have Adani Port and SEZ, where there are 27 analysts who track the stock and all of them have a buy rating along with a return potential of about 22%. However, if you have a look at the broader markets as well, there are plenty of stocks that offer a lot of return potential, and the analyst recommendation is also bullish. HG Infra, PNC Infra, along with Capacite Infra, all of them have all the stocks, all the analysts who are tracking the stock have a buy recommendation with return potential in excess of 40%. And then you have some of the real estate names which feature in this list, like Sobha, Brigade, along with Suntech Realty as well, where the return potential is about 20 to 40% each.
All right. Well, there you have it. That's, of course, today's ET Now Insight for the day. For now, we'll take a very short break right here on Buy Now, Sell Now. When we return, we will be once again telling you what the BNSN quiz question for the day is and getting you some exclusive conversations. Okay, welcome back. You're watching Buy Now, Sell Now, and it's time to reprise our BNSN quiz question of the day, where we test your knowledge on how well and how, astute are you at spotting the big trend. So the question we asked you is, which one of the following technology companies has the highest EBITDA margin? Is it A, TCS? Is it B, Wipro? C, Infosys? Or finally, HCL Tech? If you think you know the right answer, you can tweet to us on ET Now's Twitter handle. And stay tuned, of course, to Buy Now, Sell Now till 11:45 a.m. That's when we will reveal the correct answer, as well as the BNSN quiz champions of the day. Well, moving on, earlier in the day, we spoke to Jim Rogers and asked him if he would invest in banking stocks. Well, Jim did say yes, but he had a few conditions that the bank must fulfill. Take a look.
Banks are very, very cheap. There are huge technological changes taking place in the banking industry. But if you can find banks that are up to date and that understand that banking is going to be on the computer in the future, you can probably make investments. Some banks are making changes fast, some are not. Be sure that if you buy a bank, even if it's cheap, that they are making technological changes to put banking on the internet. You know, my children will never go to a bank when they're adults. The banks on the corner are going to disappear all over the world. So be sure that if you buy a bank, you have one that is up to date and modern.
Okay, that was Jim Rogers, but something more relevant to our markets today. The Supreme Court is currently hearing out a possible interest waiver case, right? Now, just to recap things for you, the Indian banking system has over 100 lakh crore loans. We definitely have more than 10% moratorium, but even if 10% you take as moratorium, on average, that's around 10 to 11 lakh crore loans that are under moratorium. That is typically earning you a 10 to 12% interest rate. That means on an annual basis, these loans under moratorium generate interest of 1.44 lakh crore odd. So on a 3 to 6 month basis, if you want to forgive that kind of interest, you're looking at a minimum expenditure of 35 to 40,000 crore. The committee said that it could be as low as 15 to 20,000 crore, but even that's a lot for the banking system right now. So depending on where you believe the final cost is, Mr. Uday Kotak, at the time when moratorium first began, he said it would be in the lakhs of crores if an interest waiver was given. So clearly it's going to be very expensive. Private, PSU, doesn't matter. You're going to have to finance that. So let's see what the court comes up with. The last we heard from the court, all they said was no further NPA declaration for loans that have not been declared as NPA till August 31st. So we'll see what they come with today, but on all counts, an interest waiver seems unlikely, given that it's going to put a lot of pressure on the financial system and banks can't be providing free financing to borrowers. So that's really the call we need to take, but nonetheless, it's going to keep the sector in focus. And now moving on to the next story, which is also from banking, Lakshmi Vilas Bank, which was quite run down a few years ago. We were looking at an acquisition of Clicks coming in and being the main promoter and joining the board here. But it seems, unfortunately, that the current board of Lakshmi Vilas and shareholders as well have rejected this proposition. My colleague Priyanka has been tracking this story very closely. Let's cut across to her for more.
Whereas in a statement, Lakshmi Vilas Bank has said that the RBI has approved that the bank will be run by a committee of directors, which is comprised of the 3 directors who were approved by the shareholders at the bank's AGM on 25th of September. The bank has said that the committee will exercise discretionary powers of the MD and CEO ad interim till they can appoint a new MD and CEO, which can be approved by the shareholders. And the bank's liquidity position is comfortable as on date. Trying to allay fears, the bank has said that the liquidity coverage ratio is in excess of 250%. It's at around 262% as opposed to the minimum 100% required by RBI. They also continue to enforce cost reduction measures for both direct and indirect costs. The provision coverage ratio of the bank also remains healthy at around 72% as against the 70% requirement under prompt corrective action. And besides existing business, the bank will continue to focus on capital light loans. The employees will continue to give their services as usual. And additionally, the shareholders have approved the increase of authorized share capital to 1,000 crore rupees. So that is something that has also been approved in the AGM as per the bank. And very importantly, the process of amalgamation with Clicks Group will continue. The due diligence has been done on both sides is what the bank has said, and that process will go on. So after the shareholders disapproved the reappointment of 7 directors, including the CEO and also the statutory auditors, this is what is the statement coming in from the bank, that there is a committee of directors that will continue to run the bank as usual.
All right, Priyanka, thanks a lot for that. Moving on, some not so great news for cigarette makers. Maharashtra has become the first state in the country to ban the sale of loose cigarettes and BDs. This is done because loose cigarettes were being sold without the packet, and that means that the graphic health warnings meant to educate the public about the harms of smoking do not reach the users. Vinny Motiwala has more on this.
Maharashtra has become the first state to ban the sale of loose cigarettes and BDs across the state. Now, this move is specifically come with a view because loose cigarettes normally do not inform the graphic health warning which comes on the cigarette packet. If you go to see, normally cigarette packets do have the warning of, smoking is injurious to health and no smoking signs. So that is something, that warning does not come into this, and that move, to show that, consumers are supposed to be warned all the time, loose cigarettes do not show that. And that is why this move has come into place, to sell, not to sell loose cigarettes without the, or sell any cigarettes without the packets. Now, what is the likely impact? Obviously, this new order may help to, cut down on smoking among the youth and reduce the number of smokers. And also previously it's seen there's a trend that when there's a 10% rise in the tax, that has resulted to a 8% drop in the number of smokers. So that will be very interesting to see how this move actually goes forward. But let's not forget, such a move was even tried before over the years, but it was not very successful. And overall, there's a lack of incentive for shopkeepers and VD-walas and small shops to actually go through with this plan. There's a lack of manpower as well to monitor and take action. So that will be very difficult. But sentimentally, it will be weak for stocks like ITC, Godfrey Phillips, and VST Industries. So we're going to keep an eye out on all these stocks and the move and how they finally go through the implementation.
Okay, thanks for that, Vinny. Let's slip into a quick break here in Buy Now, Sell Now. Plenty lined up. Don't go anywhere. Hello and welcome back to Buy Now, Sell Now. It's time to tell you who the quiz champions are for today. But before we do, let's read out the question once again just to refresh your memory. Which of these IT companies has the highest EBITDA margin? We had options of TCS, Wipro, Infosys, and HCL Tech. Now, the most common response was TCS. I believe 95% of participants guessed TCS, but unfortunately, they are wrong. There is one company that has really stood out in Q1, giving surprise margins, and that's why we saw such a boost on that counter, and that is HCL Tech with a 27% EBITDA margin, beating Infosys and TCS's EBITDA margin by 100 bips, which theirs came in at 26%. So Srinivas, whose Twitter handle is @RSrinu at 34, he's our winner for today. So congratulations, one person who got it right from everyone. So truly standout result, and you should definitely give yourself a pat on the back for guessing that one correctly. There'll be more of these coming every day, so do stay tuned for those, and do tweet to us on Buy Now, Sell Now or the ET Live handle. These questions are posted there daily. With that being said, let's quickly move on to a very important market moving event for today. RBI's October policy is to be announced this week. The policy review comes at a time when the central bank has been suggesting the need for a more stimulus, with inflation and 3 new members in the MPC. We'll be looking out for the announcement, and so we have Poonam, who tracks all these developments really closely. What could we expect this time around? Let's hear out what Poonam has to say.
Well, RBI may in fact keep the interest rates unchanged in the October monetary policy. The reason is that CPI inflation has remained over the 6% mark for a 5th consecutive month, and in the near term also inflationary expectations do remain fairly high. RBI has already front-loaded rate cuts, and we are seeing better monetary transmission. Having said that, growth recovery certainly needs good amount of support coming in from the government as well as RBI, because growth is seen contracting anywhere around by 7% to 12% in FY21. Having said that, if you look at the RBI stance, it may retain the accommodative stance, as we could see some space coming up for rate cuts, possibly from December onwards. Economists do expect a rate cut of another 25 to 50 bips from December onwards. Will it be in December policy or the policy next? We will watch out for that. As of now, yes, we should be watching out for RBI's commentary in terms of the liquidity situation, use of special OMOs. A yield in fact has ended at a 2-week high. 6.04 is where the yield has ended. It's also to do with what has happened in the bond market, but overall, watch out for the commentary in terms of growth, inflation dynamics, and the options that the government and RBI has in terms of financing the deficit. As of now, status quo on rates.
Thanks, Poonam, for that. Well, last Friday, we caught up with 4 who's who of entrepreneurial world as well as business on how these women are coping with COVID. Listen in.
You can only pivot once you've got a strong position in your core business, because you need that strength to be able to pivot. Otherwise, the pivot is going to not get you very far. So what I have seen is a very clear back to the basics. Let's look at what is essential, conserve cash, make sure there is enough liquidity in the business, make sure that customers are being dealt with appropriately, make sure that employees are safe, and so on. And that's pretty much been a very common thread. It's also called into question the economics of the business itself, and the things that should continue, the things that must change, new ways of doing things. I'm sure as we go along, we'll hear the word, digital, digitize, etc. And, we can talk about that later.